of learning how to trade cryptocurrencies. So this evening's webinar goals, we're going to go through the challenges of trading cryptocurrencies. People are just so overexcited to trading cryptos, they don't see some of the challenges involved. And we're going to really isolate them so you guys are aware of them. And the more awareness, the more understanding you have of what you're trading, the better you can approach it. And we're going to also discuss the advantages and why people are so drawn to trading cryptocurrencies and why they're so quote unquote in terms of an asset to be trading right now. We're going to go through the types of cryptocurrencies. Okay, there are several categories of them. And then we're going to go into strategies to trading cryptocurrencies. And of course, as always, we'll have our question and answers form. You are welcome and encouraged to ask questions throughout the presentation, but in case we don't get to them, we do have a designated time at the end of the presentation. So let's start our presentation and let's get into it. So the challenges of trading cryptocurrencies are very reminiscent of what I call, or what I refer back to, the internet boom of the early 1999, 1998 to 2000. Yes, that's how old I am. But the advantages of that is that I could refer back to that, okay? And I could see some similarities between the two. And some of the challenges between trading cryptocurrencies and trading those type of internet stocks back in the day, as we call it, okay, is very similar, okay? And if you've seen this once, you've seen it twice, you've seen it 3 times, you could then refer back to it in terms of understanding what's going on in the markets. Now, the first thing is it's light volume traded, okay? There's not a lot of participants trading cryptocurrencies yet. Yes, it has gone to the masses. Yes, is it accessible to everybody on the planet? Absolutely, but still it's not something that is traded like, let's say, the Dow Jones is traded. It's not traded as much as the Euro USD. There's not as many participants in it because it's still something relatively new. Yes, it's been around since 2009, 2011. It hit the markets in 2013 on a mass level. It capitulated in 2017, 2018, but it hasn't really hit the mainstream so much yet, okay? You could quantify it, okay, to the exponential power of how much more so it will be much more prevalent, much more used, okay, in the next 5 to 10 years. But right now, we're still in a transition stage of we knowing how to handle it, knowing how to absorb it yet. And I think that we're still there. So number one, it's light volume traded, which means that it's much more volatile, number one. It's much more, could be whipsawed, okay, or could be moved, or quote unquote, I don't want to say the word manipulated because people have a very bad association with that, but it can be moved in the market quite rapidly, okay? So number one, it is light volume traded. Number two, there's short-term track record to really refer back to it. We are technical traders. We are ones that are looking at graphs and looking at historical repeats in the patterns of what's going on in the markets. And relatively beyond 5 or 6 years ago, okay, there's very little that we could refer to in trading cryptocurrencies, okay? Even, something like the Dow Jones or even a stock like IBM, you could almost go back 100 years and refer back to it, okay? It's sometimes not relevant, absolutely, okay, because it's just like a flat line when you go back to those type of times. But nevertheless, you have historical data that you can refer to. In all fairness, okay, more than 5 years, okay, is really irrelevant, okay, for trading purposes, unless you're hitting multi-year support, multi-year resistance, which is something like the GBP is doing right now, where it's hitting certain areas never hit before, okay, historically speaking. So it's not as big an issue, okay, especially if you're day trading it, but you do want to know that there's a short-term track record to understanding the historical factors of trading cryptocurrencies. Number three, there's no central point of information to gather, okay? It's really disseminated in the market. Yes, there are some major news outlets like Bloomberg News, like CNBC, okay, some of the major financial media outlets are publicizing, are speaking about it, absolutely, But in a whole general law, there isn't like a central bank who's giving out information. Okay, there's no, weekly reports or quarterly reports, sales reports as what's going on, okay, to the flow of, some of the cryptocurrencies. So there's no central point of information to really gather, okay, which is really very elusive and very cryptic. Okay, maybe that's part of the name cryptic for the cryptocurrencies that it came out. So it is still very difficult to track informationally. Number four, the market is still in the beginning stages. I've mentioned this before, okay? It has been in the markets for about 6 years, but it's still very young. It's in infant stages, okay? It's still, how many people do you know use Bitcoin to actually purchase something, okay? It's still not there yet. Yes, there is Bitcoin wallet, and crypto wallet companies that are now starting to spurt up, and yes, they're becoming a little bit more prevalent. Yes, they're becoming a little bit more used, but it'll take a few years. It'll take 3 to 4 years to actually make that transition. And as you see that the traditional currencies are now falling apart, I mean, we do work with a lot of South African clients, and the rand has really fell apart over the past decade. Okay, almost half of what it was worth a decade ago. Okay, so there's less, I think that there's less trust, and there's less dependency on people on their central banks. And with that said, people are finding new havens to put their currencies in. Okay, so Bitcoins and cryptocurrency wallets are starting to spurt up. So although the market is still at the beginning stages, that could actually be viewed as a positive as well. But in terms of trading, you still don't know the full effect of it. You still can't see how further it'll go. Number five, it's greatly affected by news events, and it could come at any time. And we've seen that just recently when Facebook came out with Libra, okay, their cryptocurrency, and regulators started jumping on that and saying, hey, what's going on here? Okay, and if Amazon starts coming up with their own cryptocurrencies, it's going to be a mayhem. Okay, it really can add a tremendous mayhem on the markets because it's not controlled by anybody. Okay, so although we live in a free society and a laissez-faire market system, okay, the central banks still have a duty, okay, to make sure that they follow through on making their particular currency stable, okay, which affects a lot of different people. And I think I'm not sure that the creators of some of these cryptocurrencies have really taken the full picture of the enormity of their responsibilities towards their currency. So it's greatly affected by news events, and they come at any time. And especially when that news came up, and Congress started jumping on it. Wait, got to regulate Facebook, make sure that the Libra is okay, and this and that. The stock actually tumbled about $15 to $20 right after that news event. Now it regained itself back afterwards. Everything was fine, but nevertheless, Bitcoin and some of the other cryptocurrencies are tremendously affected by news. Number six is the spreads are very wide. Okay, it's not cheap to actually trade them. Okay, and they are very volatile, like I mentioned before. They're light volume, and their spreads, okay, between the bid and the ask is relatively still very high. Now, as that becomes much more prevalent, if you look at the Euro USD, it's a very highly volume traded asset. So therefore, the spreads are very narrow. Okay, but by some of the cryptocurrencies, they're light volume, and therefore their spreads are still very wide and makes it very expensive to trade. Now let's discuss some of the advantages of trading cryptocurrencies. So number one, off the bat, volatility is a scalper's haven. If you're a scalper, if you're trading in intraday kind of trades and you're looking for momentum kind of trading, and you're not looking for the bigger move, and you're not looking to, wait 2-3 days for a trade to develop, you're just looking for intraday, there's lots of opportunities to trade cryptocurrencies. Absolutely. Okay, that means you're in, you're out based on a news event. Okay, and you really come in and out multiple times throughout the day, because those multiple volatility circumstances actually create a tremendous amount of possibilities and opportunities for you to trade them. Absolutely. So for a scalper, if you're a scalper as by trade, okay, and you like scalping the markets, this is really a haven for you, okay? It's mostly news-driven events, okay, multiplied by trading opportunities, and that's really what's important, okay? So it's interesting that the disadvantages is also works as an advantage because news moves the market, and if it moves the market, there's volatility, there's a lot of fading the kind of news, okay? It's still within the parameters of trading, technical trading, but it's news-driven. Okay, so as long as you're watching the news and you're being, putting your finger on the pulse to see what's going on in the markets, you could really optimize your trading on these type of opportunities. Number three, there is a leader of the pack. Okay, we're going to go into some of the trading strategies a bit later, but there is always a leader. Okay, and in the Dow Jones right now, okay, just to give you an example, Microsoft is the leader. It was pushing the market to 27,000 in the Dow Jones. Well, Microsoft went from $100 to $140 over the past 6 months. Okay, and that's really what led the market higher. Okay, sometimes it's one stock that could move the entire market higher, and that's true here also. Okay, if Bitcoin is rallying, okay, then it could move Ethereum and could move Litecoin and could move some of the other smaller cryptocurrencies higher. Okay, now I've seen that historically several times. Okay, this is something that is not just now, it's something that is always the case. Okay, you see repetitively that there's always a leader of the pack. Okay, so very clear to see that here as well. The rules of technical trading applies. Okay, so that's another advantage to cryptocurrencies. People think, okay, so I'm just trading cryptocurrencies, so they have to be in another category. They have to be completely isolated from everything else. I can't apply some of the trading technical rules that Fred has taught me. No, you can apply them. You could apply Fibonacci retracements to them. You could apply technical resistance, technical support. You could apply trending markets, okay, channeling markets, okay, trading within a range kind of markets, okay. Everything is applicable that we've taught you in regards to technical trading can be applied to trading cryptocurrencies. Not even a question. Number five, it's a developing market and it's just getting started. So this is actually what works as your disadvantage also works as your advantage. You're just at the inception. You're at the beginning of this massive new front, okay, of a business that is yet to really develop itself. And we're still in the beginning stages of it. If you think about it from, 20 years from now, and you'll sell your grandchildren or great grandchildren, hopefully by then, okay, that you were there when cryptocurrencies just came to the market and you were there. You saw the development of it from year to year, how it got more and more accepted by the public. Okay, we all have cell phones, we all have smartphones around the world. Okay, I don't need to tell you that. Most of us have Instagram, or we have Facebook, or we have one of these type of mediums that we use on our phones. And for sure, once this becomes more prevalent, you'll see just this developing more and more and more and more. The question is when regulators actually going to jump in and start to regulate some of it, because it has to have some sort of accountability, okay? Because if there's no accountability, if it's all based on the organic supply and demand, we've seen that actually fall apart in the 1920s, okay? That's why the central banks were actually created, because there was the crash of 1929, which was the most massive crash, and it led to a depression in the United States following. So, for about 10 years, the markets were really very bad. But the markets regained themselves. Okay, they bounced back from it. But that was really why the central banks were created, was because there was no accountability. And so I think to a certain level, someone's going to nip the bud at a certain point to add some accountability to it, and that may take some of the volatility away from it. But at the same time, it will change it into something a little bit more accepted. Okay, you want that to actually happen. You want that metamorphosis to actually occur. Okay, so number one is you got to know your cryptocurrencies. Okay, each cryptocurrencies trade differently. Okay, it's not even a question, just like each asset class trades differently. We don't trade oil like you trade stocks. You don't trade Forex symbols like you trade commodities. They all have their own nuances, and you got to learn to understand them. Okay, so this is really just, for what time frame we're at right now. Okay, so let's call it, middle of August 2019. Okay, right now, this is how Bitcoin is behaving. And this is why I said to you earlier, okay, because when I refer back to when I started trading internet stocks in late 1990s, not 1900, right? And early 2000, some of those internet stocks are still around, something like Amazon, something like Yahoo. Okay, I guess you guys probably didn't hear of Yahoo before. Okay, but these internet stocks have changed. Okay, today they don't trade the same way they did back then. Okay, so in back then, for example, Amazon was a $500 stock. Now you don't see that on the MT4 when you look up on the graph, because back then actually there was some splits that happened. Okay, the stock split. So for example, it was trading at $500. Okay, if you had one share, it became $250 and you had two shares. Okay, so there were like 3 or 4 splits. So, taking that into effect, looking at the market since then, okay, to tell you the truth, today, Amazon is much more volatile than what it was back then, okay? And even then, it was very volatile. The spreads were very wide, but even now today, it's exponentially more wide. However, if you look at Yahoo, okay, which is a small company today relatively to what they were when they first came into the market, okay, they were really the market leaders in um, in online searches, okay, they were really, they were before Google. Okay, Google came into the picture a little bit later and took the market over because their product was so much better, and they did it so much better than how Yahoo initially did it. But in those days, Yahoo was trading like a crazy man. Okay, it was like, so volatile. And today, it barely moves. Okay, so the character of it has changed. And so for right now, looking at our cryptocurrencies, we're looking at the character right now. So if we look at Bitcoin, Bitcoin is probably the most volatile. It's the most expensive. It's the leader of the pack because it was the first one. So to speak, it's the Yahoo. Tomorrow, there could be something else that comes into the picture. But for right now, it's the most volatile. It's the most expensive. And it's basically the leader of the pack. So generally, when Bitcoin goes up, guess what? As a whole, as a sector, as a segment, everything else also goes up. They pretty much follow Bitcoin. Now, this is not a rule of thumb. This is not, 100% of the time, but most of the time, it will affect, the other currencies. Number two, Ethereum. Okay, which is another cryptocurrency that we trade here at CM Trading that you're able to trade. It's less volatile, it has less volume. It's definitely not the leader of the pack, but it's someone in between. Okay, now I've chosen these three particularly to discuss. Okay, the next one is Litecoin, which is really the weakest of the bunch. Okay, it's not as volatile and has much less effect of what's going on in the general market to it. Okay, and that's really kind of like the characters of what these particular currencies are like. And it's really important to understand them because you could trade one against the other as a sector, like I've mentioned before. So you got to know the currencies, you got to know the characters of these particular cryptocurrencies. Now let's discuss the trading strategies, for cryptocurrencies. So I've mentioned before you could apply technical trading. Okay, so number one is you could trade the leader of the pack versus the laggers. Okay, so for example, if Bitcoin goes up 2% per day and Litecoin isn't really moving, well, guess what? At the next time when Bitcoin is actually selling off, I would expect Litecoin to actually sell off much further. Okay, because there's something called relative weakness. Okay, so I got to relate the two to each other. Okay, is Bitcoin getting so much stronger than everything else? Is everything else getting, let's say Bitcoin is up 5% on the day and everything else is up 10% of the day. So there's relativity in regards to how strong one is to the other. And this is also about learning their characters, not individually, but learning their characters in relation to each other because they are traded as a sector. Number two is technical trading rules applied. I've mentioned this before in the presentation, and this is really very important because I do a Bitcoin on the daily review. I do a Bitcoin review every so often when I see there's an opportunity in it, especially if it's trading within a range or it's breaking its range. There are definitely opportunities to really smash those type of situations and really take advantage of them. Okay, technical trading rules apply. Support is support. Resistance is resistance. If you apply Fibonacci retracements, they do exist, and I've showed you that on the daily review. So this is really beautiful that they do apply, and it's very, very easy to apply the technical trading. Number three, those of you that have attended my webinars on trading the news, trading the NFP, okay, fading the news is a really great strategy that you can apply. No, fading the news pretty much means that you're taking the counter move after a news event that moves the particular asset in one direction. So let's say there's a news event that comes out on Bitcoin that's a negative news event, and all of a sudden it goes down 300 points, okay? There is the strategy to take the counter move, okay, that it was just a piece of news, hasn't devalued the value of Bitcoin. Okay, at the end of the day, Bitcoin is not going anywhere. It's gonna somehow make it back because there is market value to it. Okay, so this is a strategy that you see it often where the market comes out with a certain news event, the market responds to it, and then there's the counter move. Now, usually the first move you can't catch because that's too fast and you didn't anticipate the news, but the counter move you can actually anticipate. You're there, you're watching it, you're seeing it kind of like settle. You're seeing that, the news is out, the smoke is all out, okay, it's clear, the fog is all cleared up, and then you could decide rationally whether or not that news event should have affected that particular market in that direction and that it actually went in order to hit the counter move. Now, number four is trading the sector, and I briefly touched upon this in the presentation, is that you could trade the whole sector as a whole, okay? It's not individual anymore, okay? It used to be only be Bitcoin. Now there's Ethereum, now there's Litecoin, now there's a bunch of others also that you're able to trade. So if you look at something at the sector as a whole, okay, we do it in other businesses as well, the banking sector, okay, we look at the US banks, the JP Morgans, the Morgan Stanley, the Bank of America, Citibank, and they're traded as a sector. So it's the same story by cryptocurrencies. They are traded as a sector, which is really very, very important. So these are some of the strategies that I wanted to share with you guys today. If there are any questions, I'll take them now.